Good morning and welcome. Patriot Radio News Hour. Wow, it's Friday. Maybe did I start drinking already? No, not yet. But happy Friday to everybody. It's going to be a good day. My wife and I, one of our good friends, they hit the big 6-0. You know what? I had two friends this week turn 60. And it's so funny. Our conversations are so different, right? You know, getting old, it just sucks, right? It just does. And but we've got some fun stuff planned. We're actually going to go up to Vegas and hang out, a bunch of couples. We were going to go watch the Scorpions, which I know that makes you even older, but I don't know. Apparently one of the Scorpions, he's so old that, I don't know, there was a problem, so the show got canceled, but we're going to go anyway. Hopefully I can forget about, what's going on for at least a few days before we get back at it. And, man, what a crazy, crazy time it has been. Yesterday, the Dow and all that fell again. The S&P took out all of its gains. The Trump gains and all of those were taken out. This week will be the first week. And I knew gold's been on this run and hasn't let anybody in. But this week is the first down week for gold this year. Matter of fact, it's Christmas, I think. So make sure that you take advantage of this. And it's already, we went back to the old, that 28, and I'm talking about the gold on TV. TV gold, because that's the contract they care about. That's the April gold contract. That 28.50 support level has kind of bounced off of that. But the Dow, we'll see what it does. It's up right now. We did get some inflation data out, and it was as expected. They do have, if there's one good thing, is the next 2 months, some big numbers fall off from the year-over-year numbers. The problem is after that, they got the real small one. Remember that we had that little period where they said inflation, oh, look how great of a job we're doing. That's coming up right after it. Obviously, everybody's been talking about the tariffs, what's going to happen there, the jobless claims that spiked last week. Yesterday it came out, right? We're starting to see the effects of the DOGE cuts. An article out today talking about, hey, get ready, Maryland, Virginia, and other states surrounding D.C., talking about, Bloomberg was talking about these job cuts and saying that for every one federal employee, there's not one, but two contractors that are tied to these employees. So people are starting to say, hey, listen, there's going to be this wave. And this is the thing that we worried about, right? Is there going to be a wave? I didn't even think about the contractor thing. And so there's probably more layoffs coming in the following week. So we'll have to wait and see if that starts to happen, right? Then we're going to start talking about can they lower interest rates, even though inflation is taking hold again. And like I said, they're going to get a couple of months where the month-over-month numbers will be high, but the year-over-year number may not move because they're going to have some big inflation numbers that fall off here. And so it's going to be interesting to see how it happens. And then a lot of people still questioning the gold in Fort Knox. I actually did an interview yesterday with another show here in Phoenix. And they were starting to, question, hey, what's going on in Fort Knox? Are we going to get an audit? Are they going to revalue gold? A lot of the things that we talk about here, but Jason, there's a lot of people speculating that the gold that was in Fort Knox, some people are the aggressive ones. Hey, they've stolen it. I don't think they've stolen it. I hope they haven't stolen, right? I'm hoping that the worst case scenario is they may have leased it to somebody else, but hopefully they haven't stolen it. And a rumor circulated yesterday that maybe it was the United States Treasury that was the mystery buyer in New York. I don't know. If it is, that just tells me that they did lease out the gold and they're trying to bring it back. And remember, Fort Knox doesn't have all the gold, right? Fort Knox, they say, has about 4,500 metric tons of gold. From what we were told is that was the gold they took from the citizenry in 1933. What they called the Depression-era gold coins. Funny how they label that. These are the little subtle things that they do. Right? Want to make you think that gold was the reason for it was the Depression-era gold coins. Never mind that we became a superpower on the gold standard and left the gold standard after we put the central bank in 1913. Is it really shocking that they screwed it up and we had a depression? Not really. But we're going to talk more about this when we get back. 800-951-0592. Patriot Radio News Hour. Joe and Jason on this Friday. Quick look in at the markets. For now, the Dow is up 270. This has been the pattern. Let's hope it holds. Because the last, really like 3 days in a row, it starts up but never finishes up. We'll see how it goes. The S&P, like I said, took back all they've taken it all back. I guess the Trump bump has been taken back here. It's up 20. The Nasdaq's up 77. The 10-year note. Look at what's happening here. 423. So continuing its downward flight here. The yield curve inversion spreading. Right, we're reinverted in the 3-month. We're reinverted in the 6-month. The 1 year, we're right next to it. Right. This is again that fits our time. And remember, we said when it uninverted, 3 to 6 months. We're about 5 months in here. It's reinverting again, which is the Fed's. Again, we got to listen to this nonsense. The Fed's favorite recession indicator, right? So this is why is it well, because it's always happened. So I could understand that, I guess, to that point. Crude oil, 73 and change, right? The tariffs, they're coming. 25% Mexico and Canada, 10% on Canadian energy, now 20% on China. And remember, April the 2nd, the EU and others are going to be next in the gold market. Right now, gold is down $23. Right now, spot gold, $28.53. Silver down 20 cents at just over $31. Get diversified here. Look at what the setup is. The bond market, the bond market's trying to send a message. What are they worried about right now? Not worried about inflation anymore. We're worried about recession, and a big one, right? That's what we're setting up for, right? It's not this garden variety. No, this is the bubble, right? How big will it be? And the bond market, they're nervous right now, right? We're going to have to see, what does the data look like in the next, say, month month and a half at most, I think we're going to get a much clearer picture of what we are to expect. So if you've got, big IRAs and things of that nature, call us. Take part of that, get it into a gold and silver IRA, be diversified here. Look at even the big names are starting to suffer when we look at it. NVIDIA, which it was good, not good enough, right? Walmart, good, not good enough. Amazon, good, not good enough, right? We're seeing, like I said, the price to perfection. And the problem is, what about the other companies that aren't the big seven? They aren't the Mag 7. Yeah, they're going to have a tough time. By the way, just closures today. Red Robin saying they're going to shut dozens of stores. Kohl's going to shut 15 stores by April. Google announced that they are going to be cutting off, laying off people and their corporate. Microsoft says it's shutting down their Skype department. I guess, I don't know, are we no longer Skyping? Maybe, I guess not. I don't know. I don't really do it, but Jason, 21 years of Skype apparently comes to an end, and I'm actually missing a couple. So there was like 7 or 8 companies that all announced either we're closing facilities or we're laying people off, and I think that's going to be the trend here. How big does that number get in the next 6 weeks?
Well, and we'll have to see. The jobs numbers comes out next Friday, right? So
yeah.
Does somebody know what these numbers are? Does somebody already have the number, Joe? Is that what all this fear seems to be coming from?
It's interesting. That would make sense, right? Or either there's a whisper number out there for sure, right? And I'm going to say this because this number that's coming out, what Jason's talking about, next week is jobs week. So we'll get ADP on Wednesday, jobless claims on Tuesday. I think we'll get JOLTS on Tuesday, jobless claims Thursday, and then the government number Friday. One thing I know is the government hiring was accounting for, 30 to 40, well, really 30 to 50,000 jobs every month. So I would expect that government number to be a negative number. Not only do I not expect it to have any positivity, it should be negative. Which, are we going to see, job growth below 100,000? I think it's very possible. Could we actually make... I don't know that we could see a negative number yet. That would be something, though. But, yeah, it would... I think next week's going to be very important. I really do, as to what is the health here, because I think that's the big scare. Is all of a sudden, is unemployment going to start ticking up? What are the ramifications from all these people being laid off? And then at the same time, let's face it, Tuesday, the tariffs start. How fast does that get to the shelves? And that'll be the question that will remain to be seen. Hopefully, these companies did somewhat of a decent job of maybe, hey, let's get a bunch of stuff in here right before the tariffs take effect, and maybe we can get a little lag to that actually hitting the retailers. But like I said, the auto companies are already out. It's going to cost about $10,000. That's a lot, right? That's a lot of money to add. And I worry about used vehicle prices. I think they're going to spike because of it. And that's been one of the reasons why inflation, got better last summer, was because used car prices fell back because there was plenty of cars on the lots after COVID, Jason.
Right. I mean, in 2021, there was an emptying out of cars, new cars, used cars. They were just completely gone because of the inflation. But before and then after that, the money dried up, and the car lots, they're having trouble selling cars now. In 2021, the number one asset class in America was used car sales. Used cars went up more than anything else. Went up more than gold. Went up more than the stock market.
Right.
But then it just dropped off because cars are dependent upon consumerism, and consumerism died. And so, it's not a good time to be selling homes and selling cars right now, and it's showing it. Even Walmart is admitting to consumers dropping off and not buying. And when people aren't buying Walmart, there is no alternative, right, Joe?
Yeah, and the scary part, and you talked about homes. Every new home, this is going back now. The builders are saying we're back to 2007, 2008 with inventory. The amount of homes that are completed but not sold, the amount of homes that are been started that are going towards completion, right? These numbers are off the charts, and their sales just aren't there. Now, again, are we going to see something where interest rates are going to try to go down here to make, the car costs $10,000. Well, look at home prices are still going up. But hey, the mortgage, can we get something if the mortgage rate goes back down to say 5%? Right? If I know a car went up by $10,000, but your interest rate, we're going to be able to get you, if you got good credit, right? We're going to be able to get you a decent rate. I don't know. I think that's going to be the other wild card in here is how much inflation is there? We know the Fed's going to end quantitative tightening, and we do know, Doge let it be known, we're going to start selling these buildings. And, of course, there's not a lot of money there, Jason, but it's something. The real thing, though, I think that everybody's waiting for is, what are they going to do with gold? And they still want to do a sovereign wealth fund. That is the other thing. The one thing we know on the sovereign wealth fund, Scott Bassett said, we're not going to use gold to fund the sovereign wealth fund. But that's all we know.
Well, yeah, because, gold is going to be used as a football, right, Joe? It's going to be used as a way of negotiating situations. But, the monetary system doesn't want gold competing against that Federal Reserve note. The central banks don't want gold to competing against their money, but they're hogging it up. Well, that's because when Rockefeller owned 96% of all oil, he bought up all the oil barrels. He didn't need all the oil barrels. He bought them all up. He didn't want his competition to have them. That's what all this gold buying has been the last bunch of years. They're hogging up what is going to be the competition, and China and Russia and BRICS are kind of showing that they're going to be this competition. But they're centrally banked. They're all doing it in unison because they don't want Muammar Gaddafi to suddenly have a gold money system sprout up in the middle of Africa. Because even though it could be a small country that does it, once one country does it successfully, it spreads like wildfire. So we better hog up the competition gold before we have this financial reset. This thing could be the thing that's coming in the next months and years, Joe, could be so extreme, and Americans may feel economic strife like they haven't. It's going to be the stuff that we read in the history books, right? Depression type stuff could be heading our way.
Yeah, I think that's the unknown. It's fear of the unknown right now. That's the biggest thing. I mean, I love a lot of the things that Trump is doing. It makes sense on one hand, but when you have the system that was built on the other hand, and now you're going to take that hand away, right? There's this gap. See, it's not like, we're going to reverse course, right? We're going to pivot. Here comes tariffs back, and let's cut government and all this stuff. We're going to try to do this pivot. People forget there's a price to pay for the pivot. And the question is, will we have the testicular fortitude to go through with it? And that's where we always fall short. Somebody will, I'll start it. Oh, wait, it gets too hard. Spend. Send everybody checks, right? Here comes get the printing press back going again. That is what they always end up doing. And I think for people right now, it's creeping into their heads right now. Oh, wait, oops, I forgot about the pivot part, right? I forgot about, oh, wait, we gotta eat some, we gotta eat the proverbial sandwich before everything, can turn back around again. And I think that's what we're facing right now. And then how about this today, the World Gold Council? Gold central bank buying was up another 6% from 2023. The second highest total, well over 1,000 metric tons. And Jason, this has been a story we've been talking about and talking about and talking about. Listen, this has been going on since 2005. But really since 2021, it's been on overdrive. Right, and it doesn't matter what the gold price is doing. They just keep buying, and the answer is why, and I think it's very simple. Hey, you know what? All these other assets, fiat money, that doesn't look so good. The bonds of these countries, they don't look so good. You know what? I think we're going to put some more gold away. Be your own central bank and do just that. Patriot Radio News Hour will be back after the break. 800-951-0592. Patriot Radio News Hour, Joe and Jason. The first weekly pullback in gold this year. I wonder how many weeks of pullbacks we'll have. You got to have some. But the interesting that it's been this long, but by these dips, continue to put things away. And really, this is the thing. Some people are like, well, I only have enough to buy 2 or 3 ounces, or you got, a roll of 2 or dimes or whatever it may. Dude, it all adds. It all adds up. And it adds up really quickly, is the thing when you start thinking about it's so hard when you start thinking about, when I first started, a $20 gold piece was a little over $300. Now it's almost $3,000. There was somebody did a thing since 2005. Gold's averaged 10% a year. Now, obviously, it hasn't. There's been up years, down years, but 10% a year for 20 years now. And guess what? Is the demand getting better or worse? And the answer is really simple. Not only is it better, it's way better. And it's really the demand from the people that matter the most. And who is that? Is it India buying jewelry? No. Is it the gold in the ETFs? No. How about you guys? You guys out there buying $20 gold pieces and gold eagles and 10th ounce and 1 gram bars and buying all this stuff. Does that matter? No. Nope. You know what matters the most? Central banks and sovereign wealth funds matter the most. Why do they matter the most? It's really simple. Because they don't sell it. It's a store of value. The last central bank to sell gold just to sell it for no other reason other than we just want to sell it. I think it was 2003. One of the European nations was the last one. There hasn't been a single one. Now, that doesn't mean, have central banks sold some gold? Yeah. Like Turkey at one point, Turkey, who's been a huge buyer of gold, they had to sell some gold again. Inflation was killing them. They needed to do something, and now they turned around and bought it all back again. Right? There's stuff like that. Some central banks, hey, you know what? We're going to sell some of our gold so the citizenry can, because the mint's out, right? We need to do it. But that's it. That's all there is. And when you see the survey from the World Gold Council, 81% of the central banks surveyed said we're going to be adding to our gold holdings in the next 5 years. 81%. Guess what the other 19 said? Did they say they were selling their gold? Nope. Matter of fact, number of central banks, according to the World Gold Council, that said they're going to sell their gold in the next 5 years. Answer, 0.
Yep.
0.
It's like it's a plan, right? It's like it's planned out, Joe.
Do you think maybe they know already? I mean, come on, guys. I mean, are we that dumb? Maybe we are. Maybe we are. And you know what? If we're that dumb, good. You deserve what you get. When these bubbles burst, you deserve what you get if you're that dumb. We've never seen numbers like this. Essentially, every central bank in the world said, yeah, we're going to buy gold, with the exception of probably the United States and our European buddies, and that's about it. And when you think about, well, what are their choices? It's not. You got to remember, these central banks aren't like ours, all of them. Like, we value gold at $42.22. Almost no other central bank in the world does that, right? But we do. A lot of central banks in the world buy stocks. Sovereign wealth funds absolutely do that, right? And what are they saying? They buy bonds for sure, right? We know central banks have bonds. But they got bonds, they got stocks, they let gold trade freely or float freely on their balance sheet so they can say every time the price of gold goes up, it looks better. They hide that they bought in the gold. Why would they do that? Why would Saudi Arabia try to hide it? Why did the UAE try to hide it? Why does China try to hide it? Figured it out yet? 81% of all the central banks in the world are going to be buying gold. We want to buy as much as we can for as little as possible. It only makes great sense. And if I tell everybody, if Saudi Arabia came out and said, we're doubling our gold reserve, what the? It shoots them in the foot. But understand the decision that they're making. This is my point. They could buy bonds. They buy U.S. Treasuries all day long. In fact, we're begging them to. They just don't show up. They buy stocks, right? They could just leave it in cash. Dollars, euros, yens, pounds, renminbis, whatever they want. And what are they doing? Yeah, we'll buy gold. Thanks. Thanks a lot. We're not going to buy any more bonds. We got enough bonds. And you'll see some, this European country bought more bonds. But that's not really how it works. Maybe they did. Chances are it was one of the companies in Europe that, hey, and I don't know which one, but there's some that are making a lot of money. They don't keep their money in the bank. They buy bonds. Really short-dated ones, too. And now they get paid more interest than on a 10-year note again. Yeah. It'll be fine. What's to worry about? Patriot Radio News Hour will be back after the break. 800-951-0592. Today's special, I don't know how long this will last, but the $10 Indians have gotten affordable. They don't really get affordable very often. But right now for today, I got almost 55, 56 $10 Indians. $60 off at $15.35. That's $35 less than a $10 Liberty. $35 less than a $10 Liberty. And that's just value. Why? And I've told you the story a million times, right? Because the Indians were the fractional coins that went with the St. Gaudens. So you had a $20 Saint, a $10 Indian, a $5 Indian, a $2.50 Indian. That's what you had. Well, here comes the plague. Right? And what happens is, oh my gosh, Eric always used to say, don't put that in your mouth. You don't know where it's came from, right? Well, the Indians, they carved into the coins. They called it an accused design, and they thought the grooves may have the plague. So they actually just stopped minting them. They when you think about from 08 to 33, 10 to 12 years is all they minted the Indians for. That's it. Most of the time they didn't even mint any because nobody wanted them. And now, Jason, and when you talk about pre-33 gold, the most wanted coins in pre-33 gold are the Indians.
Indians are pretty cool. I mean, the customers that and Joe's taking some phone calls, so we're getting some orders going. So sometimes Joe has to jump off. We have some personnel changes over in Arizona, so call the number 800-951-0592. So it looks like we got some interest in these $10 Indians, but the Indian designs they came out in 1907. Theodore Roosevelt he thought that the European coins were beautiful, and he thought that our plain Liberty designs were. He actually wrote a letter to the Treasury and called the coin designs. That's all the coins of an atrocious hideousness. So he got St. Gaudens to do the $20 gold piece, and then they did the Indian designs on the fractional gold. And then you got Abraham Lincoln popping up on the penny, and and Jefferson showed up on the nickel, and of course the quarter eventually became George Washington. But the Indian designs were very popular. I mean, the Indian cent is also a very popular design. Now, it was before all these changes. In the 1800s, we had the Indian penny design, and the penny was the people liked it. They liked that Indian penny design. It was a Liberty cent. It used to be this large quarter-size copper cent. And then when the Civil War happened, they shrank the copper down because they needed copper for the war effort. And then after a couple of Flying Eagle designs for a couple of years, then it was this Indian design, and people loved it. People loved it. And so when Theodore Roosevelt wanted his change, St. Gaudens got the Liberty walking design for the $20 gold piece, and then we had Indian straight down on gold. And Joe, it's why our customers like it. There's less of them because there was less years they minted them. Those were the designs that were still sitting in banks. And when the confiscation happened, you would think, well, a lot of the older coins would get melted. Well, whatever was sitting in the banks is what got melted. So a lot of the St. Gaudens and Indians were still sitting there in the banks when the confiscation happened. So a lot of the Indians got melted. So they didn't make it for very many years, and they also got melted because I don't think there was a rush, Joe, of people going to get $10 and $5 Indians when they were going to it'd be illegal to own and melted, right? So that's why there's a premium on these items. So if you can get them anywhere close to the Liberty price, as Joe has told us today, that price, Joe, is a $15.35. Is that the price? Yeah,
$15.35. I was just looking back. I have these sheets that we print out every day of the prices, and I've got, I don't know, like 10 days worth. On the 24th, so what was that? Tuesday? Monday? Something like that? Tuesday?
Monday.
I don't know, whatever day it was. Monday. Start of this week, they were $1,620. So you're talking about almost $100 off, $85 less. Take it, and again, those are just opportunities that present themselves. This is a coin. Listen, in the 20 plus years I've been doing this, 3 different times the Indian markets have taken off. 3 different times. What does that mean? That just means they sold so far above the melt value and the spot price that you could have $10 Indians that would cost $200 to $300 more than a $10 Liberty. I mean, one time, I think we ran a sale where if you sent us 9 Indians, you got $10 Liberties. Because I was like, hey, go grab the extra half ounce of gold here, right? Make that trade. That's what these coins can do when some dealers out there decide we're going to run these markets. The Indian market is the ones they like to run because, like Jason said, there's not as many of them, and it's easier to drive prices, and it happens a bunch. And I'll come out. Listen, Jason, we'll come out on the air and tell you when it's happening. The funny part is, though, Jason, everyone wants what they can't have. And they end up buying the Indians as the price is skyrocketing instead of, trading it down. But I'm telling you right now, great opportunity today on these Indians. And we'll see how long. We had that long. Remember, we had that long stretch where we sold $10 Liberties for less than 20s. We won't get the long stretch of within $10 Indians being less than $10 Liberties. We just don't. It doesn't happen very often. 800-951-0592. Final segment coming up. Final segment here, wrapping up this Friday, the first down week in gold in 2025. And to celebrate, $10 Indians, $1,535. That is $35 below what a $10 Liberty is at 800-951-0592. And again, we'll see what happens Tuesday. The tariffs kick in, and next week is jobs week. So I think, Jason, this week we didn't have a ton of economic data until yesterday, and then today the Fed's favorite inflation number. Why is it their favorite? Because it doesn't track inflation. It's the lowest. Came in as expected. Ready for this? 2.6%. Does anyone believe that? Anybody? Anyone? Do you think all these central banks that have been buying all this gold believe 2.6%? Let me tell you, nope. Sure didn't. But I think next week we're going to get a clear picture here with Wall Street. If these jobs numbers are really bad, then you're going to hear Wall Street talk about the Fed needs to cut rates, right? You may even, you know what? You can even get Trump coming back out. They were saying they were going to stop doing that. But, Jason, if the jobs are bad enough, don't be surprised if that happens. And remember, the Fed's already said they're going to stop quantitative tightening, which obviously opens up what? Quantitative easing. And also, hey, we may have to lower rates. We'll see. I don't know. It's going to be one of those things where, like I said, they want to grow. They don't care, which means don't fight inflation. That's what it means. That's what growing means. Don't fight inflation. And I think right now they want a weak jobs report so they can hammer the Fed to get these rates even lower, so they can get that inflation. Listen, that's what growth means. I hate to say it, but it means inflation. And also March. I want to say it's March 15th, March 14th. We got to either get a budget right? That's another one of these government shutdown weeks, right? We seem like to have one like every 8 weeks. Well, March 14th, I think, is the next government shutdown week. Jason, March is going to be active.
We're going to have a Democrat-led House and Senate by the midterms because Trump's going to have his tariffs, and the Republicans are going to blame the trade war. That'll be the name. First is tariffs, then the next catchword is trade war, and you'll have the Republicans saying, well, if it wasn't for China and Mexico, if they could charge less money, they could handle the tariffs, and they could, and then the Democrats will be like, it's the tariffs' fault, it's all Trump's fault, all this inflation, because I think we have massive inflation at the end of the year in 2026. Here comes the midterms, and just like the last 10 presidents, back to Clinton at least, the president comes in with 2 years of having the House and the Senate, and then at the first midterm they lose it all. It's happened every president. Every president it's happened when they come in.
That would actually be bad. That would mean we're going to prevent getting out on the other side, right? That would be something where
inflation,
all of a sudden
it's all inflation, right?
All the hard work got done, and then you chopped them off at the knees, right? I hope that's wrong. I truly, truly do. But that sounds about right, doesn't it? 800-951-0592.